Hello, crypto investors. Today, August 4, the market looks relatively good. They are 50 bullish, 50% bearish. If we look at CoinMarketCap, we notice that Bitcoin's dominance is 41%, which remains constant, and Ethereum has 18%. Both currencies dominating the crypto market by almost 60%. We are seeing some decline. We will definitely have a correction after the last climbs of the market. Great attention. Remember not to buy when the market is going up. Wait for the discounts, or do dollar cost average. We can see an important ranking change in XRP, which has surpassed bust. Sources say that XRP is about to win the case with the American SEC. Remains to be seen. If they still win the lawsuit, there is a good chance that XRP will go to the moon. Always check from several sources before investing in any project. We notice that Solana is still in the top 10, more precisely in the 9th position. This after their network was recently broken and a lot of money was stolen from people's wallets. Surely the creators of the Solana cryptocurrency will not stand aside and will not be in the case of those from Terra Luna. Let's move on to the most important news from the crypto market: $2 in crypto stolen from cross-chain bridges this year. Chainalysis. The $190 million Nomad bridge exploit is just the latest out of 13 separate bridge attacks in 2022 so far. Cross-chain bridge hacks have accounted for 69% of the total crypto stolen in 2022, amounting to $2 billion in losses, according to a new report. The report comes from blockchain analytics firm Chainalysis on Tuesday, noting there have been 13 separate token bridge hacks this year, the most recent being the $190 million Nomad bridge exploit. Q1 2022 was by far the quarter that saw the most amount of crypto stolen since 2021. Due mainly to the Ronin bridge attack in late March, which saw $624 million in Ether, ETH, and USD coin, USD, stolen. Cross-chain bridges, also known as blockchain bridges, are designed to transfer cryptocurrencies from one blockchain network to another. Chainalysis explains that while bridge designs vary, users typically deposit their tokens from one chain to the bridge protocol, which are then locked into a contract. The user is then issued the equivalent of a parallel token in another chain. Bridge vulnerabilities. According to the Chainalysis report, bridges are often targets because they feature a central storage point of funds that back the bridged assets on the receiving blockchain. Regardless of how those funds are stored, locked up in a smart contract or with a centralized custodian, that storage point becomes a target. According to some experts, effective bridge design is still in its nascent stages of development, and some developers still have relatively little understanding of security protocols, making their protocols vulnerable to exploitation by hackers. In a July 22 clip posted on Twitter, almost 2 weeks before the recent attack, Nomad founder James Prestwich says it will be at least another year or two before there is enough familiarity across chain security models to build defenses as a standard. In cross-chain systems, we haven't built up that kind of expertise about attacks yet. People don't know what the common attacks are, and so they don't defend against them. Centralized exchanges were once the favorite target of hackers, but advances in security protocols have seen a drop in successful cyber attacks, according to Chainalysis. The blockchain analytics firm has stressed that cryptocurrency services, including bridges, should start investing in security upgrades and training sooner rather than later. A valuable first step towards addressing issues like this could be for extremely rigorous code audits to become the gold standard of DeFi, both for those building protocols and for the investors evaluating them. Over time, the strongest, safest smart contracts can serve as templates for developers to build from. Next, we see another news that can negatively influence the market. Major hack on play-to-earn crypto games, a matter of time. Report. According to a cybersecurity auditing firm, GameFi projects are putting profits above security and pose a great risk to the projects and their users. Unsatisfactory. Cybersecurity measures among play-to-earn, P2E, crypto games pose a great risk to GameFi projects and their gamers alike, warns blockchain cybersecurity auditor Hacken. In a Monday report shared with Cointelegraph, Hacken said that data indicates that GameFi projects, the category which P2E games would fall under, often put profits above security by releasing products without taking appropriate precautions against hackers. GameFi projects do not follow even the most essential cybersecurity recommendations, leaving malicious actors numerous entry points for attacks. P2E games often incorporate non-fungible tokens, NFTs, in their ecosystems in addition to crypto. The largest projects, such as Axie Infinity X and StepN GMT, use a wide array of products designed to enhance the gaming experience, such as token bridges, blockchain networks, or physical merchandise. Hacken researchers found that based on data collected by crypto security ranking service CER.lib, there were severe deficiencies in GameFi cybersecurity in particular. It found that out of 31 GameFi tokens studied, none received the top security ranking AA8, while 16 received the worst D score. Rankings for each project were determined by weighting various aspects of their cybersecurity, such as token audits, whether they have a bug bounty and insurance, and if the team is public. Hacken's report explained that GameFi projects typically scored low as it found that no P2E projects had insurance coverage, which could help projects recover funds immediately in the instance of a hack. The lack of insurance is partially confirmed by crypto insurance firm and Sir Ace's chief marketing officer Dan Thompson, who told Cointelegraph on Thursday that it was not covering any P2E projects. The report also found that only 2 projects have an active bug bounty program in place. Axie Infinity and Aavegotchi have bug bounties that award monetary compensation to white hat hackers for finding bugs in the project's code. Finally, it found that while 14 projects have received a token audit, only 5 have completed a platform audit, which could find potential security holes in the project's entire ecosystem. These include Aavegotchi, the Sandbox, Radio Kaka, Alien Worlds, and Defy Kingdoms. The report also pointed to token bridges as a vulnerability for P2E games. Axie Infinity's Ronin token bridge was the site of one of the crypto industry's largest hacks ever when it lost over $600 million in tokens in March. Related, $2 billion in crypto stolen from cross-chain bridges this year. Chainalysis. As P2E games grow in popularity, there will likely be an increase in the number of security exploits and dollar value stolen from projects, said Hacken. The firm has advised gamers to perform their own security check of projects before sinking a large sum of money into them. And, of course, keep in mind that investing in P2Es remains a potentially profitable but quite risky affair. On Wednesday, crypto analyst Miles Deutscher asked rhetorically where the next crypto security concern may come from. Deutscher may have his answer. Here we see news about Bitcoin and the U.S. Treasury. Bitcoin markets will behave more like that of Treasury bonds and gold during market recovery, said the analysts. The latest crypto market research from Bloomberg Intelligence suggests that Bitcoin (BTC) may start to behave more like United States Treasury bonds and gold rather than stocks. In its August Crypto Outlook report, penned by senior commodity strategist Mike McGlone and senior market structure analyst Jamie Coutts, the research unit compared Bitcoin markets to those of gold, bonds, and oil. The authors suggested that macroeconomic influences, such as the Federal Reserve's monetary policies, have resulted in similarities in Treasury bond markets and Bitcoin. Tightening markets and plunging global growth support the Federal Reserve's shift to a meeting-by-meeting bias in July, which may help pivot Bitcoin toward a directional tilt more like U.S. Treasury bonds than stocks. They also added that a dump-following-pump nature of commodities and receding bond yields suggest an increase in the probability of bonds and gold and Bitcoin being buoyed as inflation decreases. Treasury bonds, often called T-bonds, are long-term government debt securities issued by the U.S. Treasury Department. They have a fixed rate of return and maturity periods ranging from 20 to 30 years. The report noted that crypto markets reached their greatest ever discount compared to the 100-week moving average in July. It added that it is abnormal for Bitcoin to hold much below its 200-week moving average. BTC is currently trading up 1.2% on the day at $1,502 at the time of writing, having just reclaimed the 200-week moving average, which lies at $22,827. The analyst said that the fact that BTC was 70% below its peak at the start of August, but still 5 times higher than its March 2020 low, shows its potential. They flagged the $20,000 zone as key support and that they expect a basis building, similar to the $5,000 level in 2018-19. Related, Bitcoin bulls aim for $25K price on Friday's $510 million options expired. The researchers concluded that Bitcoin had been one of the best performing assets since its inception about a decade ago, adding, "We think more of the same is ahead, particularly as it may be transitioning toward global collateral, with results more aligned with Treasury bonds or gold." Coinbase research carried out in July indicates that the risk profile of the crypto asset class is similar to that of oil and tech stocks. According to Coinbase chief economist Cesar Fracassi, the correlation between the stock and crypto asset prices has risen significantly since the 2020 pandemic. Next, we see Starbucks teasing the Web3 rewards program to attract new customers. Starbucks teases Web3 rewards program to attract new customers. This will create an entirely new set of digital network effects that will attract new customers and be a credit to existing customers in our core retail stores, said interim CEO Howard Schultz. Global coffee store franchise giant Starbucks is looking to launch a new Web3 rewards program to attract and retain customers, according to its interim CEO Howard Schultz. Speaking during the firm's fiscal Q3 earnings call on August 2, Schultz noted that Starbucks will soon reveal a new Web3 digital initiative that will expand upon the company's loyalty program. This new digital Web3-enabled initiative will allow us to build on the current Starbucks rewards engagement model with its powerful spend-to-earn stars approach, while also introducing new methods of emotionally engaging customers. The CEO kept his cards close to his chest, but briefly mentioned during the call that the firm is looking at integrating our digital Starbucks rewards ecosystem with Starbucks-branded digital collectibles as both a reward and a community-building element. The full reveal is set to occur during Starbucks Investor Day on September 13. This will create an entirely new set of digital network effects that will attract new customers and be a credit to existing customers in our core retail stores, he said. The company's quarterly results reportedly beat analyst estimates, with a 9% quarter-over-quarter bump in global revenue to a record $8.2 billion. During the call, Schultz also said that the Web3 move is part of a push to attract and retain the younger side of Starbucks' customer base. We don't want to be in a business where our customer base is aging and we have a less relevant situation with younger people, he said, adding that the company has never been, in our history, more relevant than we are today to Gen Z. Starbucks initially announced plans to jump on the NFT bandwagon back in April, as Schultz noted that sometime before the end of the calendar year, we are going to be in the NFT business. Related, Canadian taco franchise uses NFT for customer loyalty program. Starbucks may not be the only major brand to launch a Web3 loyalty program in the near future. Last month, business-to-business blockchain startup Hang raised $16 million in series of funding led by Paradigm. The company is looking to help brands transition their current membership and loyalty programs over to the blockchain and incorporate NFT. The firm is reported to have beer manufacturer Budweiser, sports media outlet Bleacher Report, and popular music festival groups Bonnaroo and Superfly as some of its early clients. Having said that, dear crypto investors, don't forget the 3 important things in the crypto market. 1. Do your own research. 2. Buy low, sell high. 3. Be patient. So until next time, I wish you more money, be patient, and document yourself carefully.